আসসালামু আলাইকুম শাহ বদরুদ্দিন অর্চনা ম্যাডাম।
সালাম আলাইকুম স্যার।
ভালো সবাই? ভালো আছি তো সবাই ইনশাআল্লাহ।
জি স্যার, আপনি কেমন আছেন স্যার?
আছি আলহামদুলিল্লাহ। শাহরিয়ার, থ্যাংক ইউ।
জি স্যার।
একটু একটা কথা বলে দিই প্রারম্ভিকে। আজকে আমাদের থার্ড রাউন্ড, এটা থার্ড রাউন্ড, একটু সবাই মন দেখি। আজকে আমাদের থার্ড রাউন্ড বলে, অর্থাৎ 5-6 ক্লাস আমরা 1, 2, 3, 4-এর এগুলো দিয়ে দিয়েছিলাম, সিনপসিস এবং রিলেটেড আনসার্স। এগুলো you also go through these or those synopses and please establish your proper knowledge. ওগুলো দেখে আমরা ধারণা নিয়ে আইডিয়া নিই। আর আরেকটা হলো যে আজকে থার্ড রাউন্ড, and I think we sent 3 days before, যেটা একটু যারা দেখেছেন ভালো, না দেখলে একটু দেখে নেবেন। কোশ্চিন তো এগুলো কোশ্চিনারি and very helpful from previous exams and related content syllabus and also seen from manual descriptions. তো কাজেই এটা অত্যন্ত এক্সাম ওরিয়েন্টেড ওভারঅল ডিসকাশন এবং কোশ্চিনারি সলিউশন একের ভিতরে অনেক কিছু। এজন্য we know all that Friday holiday also have the flexibility, এজন্য ওইভাবে আমরা শুরু করতেছি। তো আমরা চেষ্টা করব যে একটু যত আর্লি আসা যায় এসে সেশনটা শুরু করব। আসরের নামাজ আছে ফর দ্য মুসলিম কমিউনিটি, এছাড়াও আমাদের অলসো হারমোনিয়াস টু অল রিলিজন আদার কমিউনিটি, যে ওনারাও একটু ওই আঙ্গিকে চলে থাকেন। আমরা সব ইয়ের জন্য, তো এই জন্য under the good guidance of our guardian, our sir will go through the section এবং সেকশন চলতেছে, চলুক। পরীক্ষার জন্য আমরা ব্যাপক প্রস্তুতি শুরু করে দিই। আর আরেকটা হচ্ছে যে এক্সাম ডেট ইজ ফাইনালাইজড। তো এই জন্য এমন কোনো চিন্তা এখন পর্যন্ত না করি যে পরীক্ষা পিছিয়ে যাবে, পরীক্ষা এই হবে। তো our guardian, our topmost respected, our sir, আমাদের শ্রদ্ধ প্রধান নির্বাহী স্যার আছেন এখানে। ওভারঅল উনি তো অফিস চিফ হেড, তো কাজেই স্যারের সাথেও শেয়ার করতে পারেন। বাট হেয়ার ইজ গেস্ট ফ্যাকাল্টি, বেশি অত কিছুতে যে আমাদের সম্মানিত, আমরা কনসার্ন রেসপন্সিবিলিটি আছে, আমরাই জানাবো। কাজেই স্যার এখানে আমাদের অভিভাবক, আমাদের অতিথি শিক্ষক, যাকে ইংরেজিতে গেস্ট ফ্যাকাল্টি বলে থাকুন, আর আমরা আছি, আমরা কনভে করি। এই গেল, আর তেমন কিছু নাই। আই থিঙ্ক সেশন ইজ ইন প্রোগ্রেস এন্ড ভেরি ইফেক্টিভলি ইউ আর জয়েনিং। আর সাবজেক্ট ওয়াইজ ক্লাস তো, কাজেই হয়তো অনেকে ভাবতেছেন আমার অ্যাটেন্ডেন্স হয়ে গেছে, আমার ক্লাসের কি দরকার, এরকম না ভাবি। কারণ উই অলসো উইশ অ্যান্ড প্রে ফর ইউর সাকসেস, অবশ্যই করি, কিন্তু বিষয় হলো if also lag behind of your full preparation, then what will you do next? তার মানে আল্লাহ না করুক এমন কিছু যদি হয়ে যায় পরীক্ষা, পরবর্তীতে কি করবে, পরীক্ষাই দেওয়া যাবে না। এই জন্য অ্যাটেন্ডেন্সটা অবশ্যই রাখবো। 90 মিনিটসে 75 মিনিটস মাস্ট, আগে পরে থেকে। এখান থেকে 2 সেশন হলে, যেমন আজকের সেশন স্পেশাল সেশন, এখানে 15 মিনিট প্রথম সেশনে এবং পরবর্তীতে 15 মিনিট হয়তো আপনাদের আমরা বিবেচনা করব। তো ইট ইজ ইনস্টিটিউট and also framed very, I think, dignified status, যেগুলো ধরে রাখতে হবে এবং বাস্তবতা অনুসারে আমরা বিবেচনা করব। 75 অ্যাটেন্ডেন্স, আমরা প্র্যাকটিক্যাল সিচুয়েশনে and physiological terms of your 60%, যেটা আইসিবি কোচিং ক্লাস পলিসি অনুসরণ করে আপনাদের এলিজিবল করে পরীক্ষা দেওয়াচ্ছি। বিষয় হলো যে as far as who will join in the interest of you to cover all things. এই জন্য আমি ফারজানা ম্যাডাম, থ্যাংক ইউ ভেরি মাচ। আই অলসো এন্টার্ড, কয়টা যেন, 2টা 52-তে ঢুকলাম এবং আই এম অ্যাস্টনিশড, আমার ফারজানা ম্যাডাম দেখি 2:50 বা আগেই হয়তো ইন করে আছে, আমি সেকেন্ড ম্যান ছিলাম। তো যেটা বলতে চাচ্ছি যে অ্যাকচুয়ালি ইউ আর ভেরি সিনসিয়ার ম্যাডাম। আমি প্রত্যেক ক্লাসে যখন দেখি আগে ইয়ে করে রাখি তো, যে ইন্টারনেট ডিস্টার্ব যদি হয় অথবা না থাকতে পারি, এই জন্য আগাম প্রস্তুতি রাখি প্রত্যেক কাজে আমি। তো দেখি যে না, ফারজানা ম্যাডাম ইজ অলসো ফার্দার ভেরি পাঞ্চুয়াল অ্যান্ড সিনসিয়ার টু মি দেন মি, যেটাই হয়। তো এই জন্য যেটা বলতে চাচ্ছি যে থ্যাংক ইউ ফারজানা ম্যাডাম, অ্যান্ড এভাবেই হোক। আই অলসো প্রে ইউর সাকসেস। তো যাই হোক, আমরা ভালো থাকি, মানে অ্যাটেন্ডেন্স একটু কাছাকাছি শুরু করুন আমাদের পরম শ্রদ্ধেয় অভিভাবক আমাদের স্যার। এবং এই যে স্যারের আমি বলি একটু সকলকে, আন্তরিক হয়ে বলি, এই যে এত কষ্ট করে স্যার এগুলো ইয়ে দিচ্ছেন, আপনাদের ইফোর্ট দিচ্ছেন, এগুলো কাজে দিয়ে দেখেন। আমি বলি একটা কোশ্চিনারি মডেল টেস্ট তৈরি করা, হাউ টাফ। আমাদের যে রেগুলার টিচার আছেন, দে আর ভেরি গুড, অলসো এক্সপেক্টেড বাই ইউ। ওনাদের তো আপনাদের থেকে কোনো কমপ্লেন পাই না। ধরুন টিচার আমাদের খুবই কম, হয়তো হাতে গোনায়, করতেও পারে নাও পারে। রেইজ কমপ্লেন বাই দ্য স্টুডেন্টস, কারণ এখানে যারা আসেন প্রত্যেকে বুৎপত্তি সম্পন্ন। তো আমার কনসিকুয়েন্ট যেটা ছিল যে রেগুলার সেশন বা অন্যান্য সেশনে এই যে কোশ্চিনারি এগুলো তো থাকে না, আপনাদের বুঝতে হবে। আমি লেখাপড়া করলাম, করে আমি সবকিছু জানলাম, কিন্তু কোশ্চিনে আমি বসলাম না, তাহলে আই উইল নট সাকসেস ইন দ্য এক্সাম। And before starting the exams, I will be unable to adjust the situation, my dear. এই জন্যই কোশ্চিনারি সলিউশন করতে হয়, মডেল টেস্ট দিতে হয়। আমরা আগে পড়ছি না টেস্ট পেপারস থেকে, কেন? By following the questions or past questions of the exam, that those also make you capable to write time frame, sequence of questions, further enable of spirit writing in your proper answers, একদম টু দ্য কন্টেন্ট, টু দ্য জিস্ট আপনি দিতে পারেন। তো আমি যেটা বলা উচিত আমার আপনাদেরকে, যে কোশ্চিনারি প্রত্যেকটা এক থেকে প্রত্যেকটা কন্টেন্ট থেকে তৈরি করে আবার সাথে সাথে আনসার গুলো দিচ্ছেন, এভাবে তো পাওয়া যাবে না। এই জন্য আপনারা আবার যারা মূর্ত করছে আমরা রেকর্ড দেখে নিব, রেকর্ড তো থাকুক। রেকর্ডের ইয়ে আর প্র্যাকটিক্যাল তো এক না। রেকর্ডিং যেমন ফাংশন অফ হিয়ারিং, গান শুনতে রেকর্ডিং ভালো। আপনি একা নিরিবিলি আছেন, সেই সময় আপনার জন্য রেকর্ডিং কোনো কিছু সিনারিও ভালো। এই দিয়ে সিনেমা, ভিডিও এগুলো, কিন্তু আসলে ইফেক্টিভ লার্নিং এর জন্য যে প্রেজেন্টার, যিনি শিক্ষক, তিনি সামনে উপস্থিত থাকলে ওটা অনায়াসে হয়ে যায়। And education is connecting with the face, mind, even also the presentation. এগুলো খুব গভীর প্রশিক্ষণের কথা। যেটা বলতে চাইলাম যে এই কোশ্চিন গুলোতে একটু মনোযোগী হব, এগুলো সেরে নেই, তাহলে আপনাদের আর কোথাও যাওয়া লাগবে না, যেটাই আসুক পরীক্ষা। এই পরীক্ষা তো সব কমন আসবে না, আরেকটা হচ্ছে আপনাকে কমন থাকতে হবে। আপনাকে, if you want to also common in yourself all the questions which are asked or will be asked in the exam, you should have to take your such preparation, my dear. তো এই জন্য আমাদের এই প্রত্যেকটা সাবজেক্টে আমার মনে হয় আমাদের সাথে সিও স্যারের মতো এগুলো চালু করা দরকার। কন্টেন্ট বেসড, সিলেবাস বেসড। আমি বলবো আমার ফোরামে, আমার টিচার্স প্যানেলে, পুলে দেখি যে আপনারা প্রত্যেকটা অধ্যায় থেকে কোশ্চিন তৈরি করে করে, প্রত্যেকটা সিলেবাসের যেগুলো কি বলে যে ওয়েটেজ আছে, এগুলো দেখে আপনারা কোশ্চিন তৈরি করে ছাত্রদের আনসার সহ করান। However, though that means this session has taken actually medium of instructions and fully with punctual and dignity, that means English language conversation. So my dear request, I also rather convey my message all of you. Please continue the session in English. যদি দ্বৈবাদ ক্রমে নাই হয় বাংলা বলবেন, অনায়াসে বাংলা বলেন। Sir will make cover to get understood better, all of you, no problem. তো আমি মনে হয় শুরু করি 3:36 এর জন্য।
ওয়ালাইকুম ভাই, একটা কোশ্চেন ছিল।
কনসিকুয়েন্ট হলে বলি আর না হলে পরে বলি। জানুর বলেন।
ওই যে এই ট্যাক্স এক্সামিনেশনটা এটা কি নতুন ফাইন্যান্স অ্যাক্ট অনুযায়ী হবে নাকি পুরানটা
না
অনুযায়ী
না
হবে?
না 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 না। যেহেতু আমাদের সিলেবাসটা, আমাদের ম্যানুয়ালটা আপডেটেড, ওই এক্সিস্টিং এক কথায় বলে জন্য, আর এইটা আপনাদের পরীক্ষা শুরু হচ্ছে কত 16 তারিখে, আর আমাদের ম্যানুয়াল গুলো আপডেট, হ্যাঁ, এটারে বলে যে এক্সিস্টিং অথবা লাস্ট ইয়ার ফিনান্সিয়াল অ্যাক্ট, ভ্যাট অ্যাক্ট, হ্যাঁ, বোঝা গেল, ইনক্লুডিং এখন অত কাস্টমার দেয়। তো এই জন্য ওই আগের অনুসারে নিউ যেটা, এটা নেক্সট, কারণ আমাদের যে ম্যানুয়াল আছে এগুলো আবার এটা আপডেট হবে, রিভিউড হবে, ফাইনালাইজড হবে, and then you will also ask for upcoming situations। আর 30 জুন তো এগুলো পাস হবে। এগুলো আমাদের শ্রদ্ধাভাজন সিও স্যার আছেন, এক ফাঁকে হয়তো আপনারা গাইডেন্স দিন। স্যার তো দেশের সর্বোচ্চ পর্যায়ের একজন অধিকর্তা ছিলেন, সিনিয়র সচিব বিশেষ ট্যাক্সেশন ক্যাডার। অর্থাৎ বলতে চাইলাম এসআরও অথবা সার্কুলার প্রোগ্রামও প্রায় জুন জুলাই লেগেই যায়, এগুলো ইমপ্লিমেন্টেশন গাইডেন্স টাইম টু টাইম। এই জন্য কোনো মতেই আপনার এগুলো যে এখন আলাপ হলো এগুলো কনসিকুয়েন্ট এর আগেও আসেনি, আসবে না, so far my knowledge, and also discussion with my board of studies, concerned chairman and others personnel, okay, that means members and members body of taxation। এই আর স্যার আছেন এখানে এক পাকে, আপনারা আলাপ করে নিন। আর ইউ আর অলসো ভেরি সিচুয়েশন অফ মেকিং ফ্রেন্ডলি ডিসিশন। স্যার আমাদের অবশ্যই অভিভাবক, বাট এখানে আমাদের শিক্ষক, কাজে ইতস্তত বোধ করার প্রয়োজন নেই। আর আমি আরেকটু রিকোয়েস্ট করব যেটা, যে সেটা হচ্ছে আপনি একটু রেসপন্সিভ থাকেন, আপনারা সরব থাকেন, তাহলে সেশনটা ইফেক্টিভ হবে। আবার বলি, আর একটা হচ্ছে যা কিছু মন খুলে কথা বলুন, আপনি বাংলায় বলেন, অসুবিধা নাই, না পারলে আর স্যার যেটা কভার করার করবেন। আর যদি মনে করেন আরো অসুবিধা হচ্ছে, স্যারকে বিনীতভাবে অনুরোধ করেন, স্যার কনসিডার করবেন, কারণ করেন। তো ভালো থাকি, আর কথায় না যাই। ফারজানা ম্যাডাম ধন্যবাদ, আমাদের বদরুদ্দিন থ্যাংক ইউ, অ্যান্ড শাহরিয়ার একবার কথা বললেন, আবার কি যেন আরেকজন বললেন, তো এই সহ অন্যান্য যারাও কথা বলেন, সবাইকে ধন্যবাদ। তো শুরু করি, আর
জি স্যার, আপনাকে থ্যাংক ইউ স্যার।
থ্যাংক ইউ ভাইয়া।
জানিয়ে আমি বিদায় দিব। Sir, I'm your Halim sir, and I also request please remain kindly calm and also continue your valuable session and keep instructions to our senior students. Sir, adab sir. So thank you. আমাদের বদরুদ্দিন, তারপরে ফারজানা ম্যাডাম, শাহরিয়ার সহ অন্যান্য সকলকে আমরা শুরু করি, আর আমি স্যারের অনুমতি নিয়ে বিদায় যাই। থ্যাংক ইউ ভেরি মাচ, আবার দেখা হবে, ভালো থাকি। আসসালামু আলাইকুম, বাই, আদাব।
ওয়ালাইকুম আসসালাম।
আজকে থার্ড রাউন্ড স্যার, থার্ড রাউন্ড এন্ড নিউ স্যার প্লিজ।
Okay.
গুড ইভিনিং স্যার, আদাব, কেমন আছেন স্যার?
Adab, thank you very much. Good afternoon to everybody.
গুড আফটারনুন।
Yes, sir.
Okay, I hope that you have got the synopsis number 3. That was distributed by the student counseling department. If you have gone through the synopsis, you definitely gone some of the questions, that is problems. And the first problem is whether simply analysis of accretion sufficient to arrive at a decision regarding change in asset or fund. If not, why it is not sufficient? So that is the first question. Have you understood it?
নো স্যার।
No, okay. So analysis of accretion. When does it happen? Analysis of accretion. That means it is related to your assets and liabilities. So the statement of assets and liabilities that you submit along with your return reflects all your assets and liabilities and also expenditure. And a particular section is there, which is section 80, and section 80 relates to the submission of statement of assets and liabilities. Sometimes we call it wealth statement, or some may call it IT10B, IT10BB. All these are the terms, synonymous terms actually, for the statement of assets and liabilities. Better to call it wealth statement or statement of assets and liabilities. So when statement of assets and liabilities is submitted, you are showing all the assets you are owning, and you are also showing the liabilities that you are owing to others. That means you may owe to bank, to non-banking financial institutions, to persons, maybe your relatives, friends, etc. So those are your liabilities. Maybe it is also related to some traders. You bought some goods and you could not pay off the liability, so that's why this is your liability, and which should be reflected in your wealth statement. But if it is related to business, of course, that should be reflected in the balance sheet, not your wealth statement. Only the personal liabilities that would be incorporated into the wealth statement. And it is said that simply analysis of accretion. Accretion means increase, enhancement, increase. So if there is a change in your asset, it means that your asset has either decreased or increased. So when I say accretion, it means that your asset has increased by a certain amount of money or to a certain figure. So first of all, you must know how accretion is calculated. And you have to know first the net wealth or gross wealth, net liability, gross liability, whatever it is. All these terms have to be known to you. So in a statement of assets and liabilities for a particular year, you must see that there are a certain number of assets which are valued at some figures. Sometimes some of them are valued at historical cost. Sometimes some of them are valued at purchase price of the current year. And liabilities, of course, at historical cost. So whenever I have shown my assets and liabilities, when I deduct my liabilities from my assets, it means net assets or net wealth. So when I refer to accretion, I have to calculate net assets of 2 years. That means the net assets of this year and the net asset of the previous year. So when I compare these two, I come to a decision with regard to the accretion in assets or with regard to the decrease in assets, whatever it is. Generally, there is an accretion in the net wealth because you are adding some new assets to your previous assets. And sometimes if there is a liability, you are paying off the liability. So that's why your liability is reduced. And if the asset increases, there would be an accretion in net assets. Or if the liability decreases, it also means that there is an accretion in net assets. So, as I have said that we need to analyze two wealth statements at a time in order to arrive at the decision of accretion or decrease. So let us suppose that for a particular income year, your total asset was valued at taka 100 and your total liability has been valued at taka 50. So your net asset would be taka 50. And if I also calculate the net asset of the previous year, I have to go to that. Let us suppose your total asset was 80 taka in the previous year, and your net and your liability was taka 80. Or your gross asset was taka 80 and your gross liability was taka 20, for example. So your net asset would be taka 60. So since your net asset of the previous year is taka 60 and your net asset of the current year is taka 50, what does it mean? It means that there is no accretion in the asset, net asset. Rather, there is a decrease in the net asset. But if the case is reverse, that means when your net asset was, say for example, net asset was taka 60 in the previous year and your net asset of this year is taka 100, then of course there is an accretion in the net asset. So accretion by how much? Accretion by taka 40. It means that you have to cover this taka 40 with the income you have earned for the current income year. If you have earned that much of money, then it is okay. The Deputy Commissioner of Taxes will not ask any question with regard to that. And of course, you have to add the expenditure. That means if you have incurred an expenditure of taka 30 this year, then the net accretion, which is taka 40 or taka 60, whatever it is, the expenditure has to be added to that, and your income should cover these two figures, the accretion in the net assets and the expenditure. So these two figures have to be covered by your net income or total income, whatever income you have earned during the income year. So whenever your net accretion is taka 60 and your expenditure is taka 30 and your income is taka 90, then of course you have covered it. There is no question arisen by the Deputy Commissioner of Taxes to explain it to him. So that is the purpose of analysis of the wealth statement. Now, our question was whether simply analysis of accretion sufficient to arrive at a decision regarding change in asset or fund? If not, why is it not sufficient? So here I have explained it. That means you have got the assets, you have got the liabilities, and you can calculate the net asset or net wealth, and you have to compare the net wealth of 2 years. That means the current year for which you are actually submitting the return and the previous year. So the comparison has to be made. That means the difference has to be calculated by you. And this analysis, whether this is simply sufficient in order to arrive at a decision with regard to your asset or with regard to your liability. First of all, you have to say no. No, it is not sufficient. Because why not sufficient? You can say that, okay, each item of the assets has to be analyzed by the Deputy Commissioner of Taxes. Each item of liability has to be analyzed separately by the Deputy Commissioner of Taxes. Why? Because the figure of an asset that is sometimes very, what I should say, that is not the reflection of the true figure, or that is not the reflection of the transaction that has incurred during the year. Example could be given with regard to that. An example is, say you have got a piece of land and you have been actually showing it for a number of years, and the figure has been shown at taka 50 lakhs. So during the concerned year, you sold out that piece of land and you bought another piece of land with the same figure. That means with taka 50 lakhs. But as I said to you that the piece of land was sold out, let us suppose that land was sold out at taka 1 crore, and the SSC again bought a piece of land at taka 50 lakhs. So he will show the same figure in this year. But you never know what actually happened. So if the Deputy Commissioner of Taxes analyzes each and every item of the asset side of the statement of assets and liabilities, he will be able to know, because he will find out that the address that was used before for this piece of land is not the same here. So the address has been changed. So why the address has been changed? Because this is a new asset, and the old asset which was shown previously has been sold out. So whenever you have sold out the previous asset, there must have been some capital gains. And if you had capital gains, definitely you would have to pay capital gain tax. So that's why this analysis should be made separately, individually, in order to arrive at a correct decision. And if you say with regard to liability, yes, liability should also be analyzed individually, because you might have paid off the liability. And if you have paid off the liability, definitely you had some fund, or you had some sources of income with which you actually paid off the liability. But if you have paid off the liability at a certain point of time in the current year, and you again had some liabilities occurred at the end of the year. That means before the end of the year. So there would be different time when one liability was paid off and another liability was taken by the associate. So when the question arises, how you paid off the liability, you must show some source of fund with which you paid off the liability. And if you can properly explain that, yes, okay, I paid it off from this fund or that fund, and that fund is available, if you can prove, in that case, there is no question. But if you cannot prove like that, so there might arise a question how you paid off the liability. So you might have some sources of income at that point of time, how you paid it off. So as I gave you the example in the asset case, it means that if you do not analyze the asset properly, you will not understand. By simply analyzing the accretion in net wealth or calculating the accretion in net wealth, because the figure remains the same, 50 lakhs taka. The new asset was bought at 50 lakhs taka and the old asset was also shown at 50 lakhs taka. However, in the meantime, that asset was sold out at taka 1 crore and a capital gain of taka 50 lakhs arose. So if you analyze it, you will be able to know. And a capital gain tax could be imposed on the assessee. So that is why the accretion, just accretion, analysis of accretion will not be sufficient enough. And you have to remember the principle here, increase in assets, decrease in assets, increase in liability, decrease in liability. So these are the 4 scenarios. If your asset increases, it means that you have got some funds to spend for that. That means you had a source of income with which you bought that asset. So it's a source of fund. There is a source of fund with which you bought it. When you paid off the liability, you also need to have some fund. Otherwise, you cannot pay it off. So there was a source of fund. When you just take some loan from the bank, yes, it is different source of fund. That means you have got some money from the bank. It means that you have got some cash in your hand, and there is an increase in cash, or there is an increase in bank balance. That is source of fund for yourself. And as I said to you, that when you have acquired an asset, you just gave some money for that, and you required a fund. You required a fund means you had some cash in your hand with which you bought it, or you had some money in your bank account with which you bought it. But actually, that was application of fund. Application of fund means you had some fund, now you applied it. If you had cash in your hand, you applied it. If you had bank balance, you applied it. So that is application of fund. So when asset increases, it's an application of fund. When asset decreases, it's a source of fund. When liability increases, it's a source of fund. When liability decreases, it's an application of fund because you paid up the liability. So these are the 4 scenarios you have to remember so that you can apply them in calculating the source of fund and application of fund, and in the analysis of assets and liabilities and net assets or net wealth, etc. So any question for this problem? you have understood it, fine. If you haven't understood it, you can just ask me. If you have understood it, okay, we can go to the question number 2. That means the problem which has been mentioned in question 2. What is the intangible asset? Or sorry, intangible addition? How decision could be made with regard to estimation of sale, reconstruction of sale, and determining inflation in the purchase. So it's a little bit long question, although it does not show that it is long. Rather, whenever you consider the scenarios, it will be a little bit long. First of all, what is intangible addition? That you have to understand first. If you know it already, you can tell me. Otherwise, I can explain it to you. What is intangible addition? Intangible means it is not visible. We cannot see it. Addition means there might be some asset, there might be some cash, something like that. So it is, of course, an asset. So it could be liquid asset or it could be tangible asset, but generally here it will be liquid asset. But it is intangible in nature because you cannot just spend it right now. But this is invisible, but you can utilize it. That's the thing. I have got this amount of money, I can spend it. But this amount of money is not in cash nor in bank. So intangible addition, you have to analyze it from the trading account. Wherever you see the trading account, it means that gross profit is determined through the trading account. Sale is shown in the trading account, purchase is also shown in the trading account. Opening stock is shown in the trading account and closing stock is also shown in the trading account. And there are some direct expenses which are related to the purchase. So that is the way how you can see the trading account and the result of the trading account. So what is generally, seen in the offices of the taxes circle, that means a deputy commissioner of taxes is in charge of a circle, or an assistant commissioner of taxes is in charge of a circle, or an extra assistant commissioner of taxes is in charge of a circle. Whoever he is the assessing officer. So what he does, in case of assessees who are doing business, the assessees submit their returns along with books of accounts or evidences in support of their shown sales, shown purchases, and stock. Sometimes the assessees submit one sheet of accounts reflecting the statement of, assets and liabilities. That means balance sheet, and before that, profit and loss account and trading account. But some evidences are given by the SSC for the satisfaction of the Deputy Commissioner of Taxes. But if the evidences are not sufficient enough to support the sale and the purchase or other transactions in the trading account, the DCT is not satisfied, and hence he will not accept the statement submitted by him, meaning that the sale which has been shown by him in the trading account will not be accepted by the Deputy Commissioner of Taxes, as well as the purchase, that is also not accepted. But for those, the SSC should have maintained debit, daily register, sales book, purchase book, inventory book, bank statement, etc. So all these have been maintained by the SSC. But sometimes, although they are maintained, the SSC does not show all of them. But sometimes shows, of course, why not? So when such a case arises, that means the gross profit has been shown by the SSC in the trading account, and afterwards the DCT estimates the sales, saying that the sale is not supported by debit or daily register or sale book or the bank statement, etc. So he rejects the books of accounts, and that's why he also rejects the sale shown by the SSC. And in that case, another sale is estimated by the DCT. So, for example, the sale was 50 lakhs of taka shown by the SSC. Now the DCT rejects it and estimates the sale at 1 crore of taka. So the GP which was shown earlier is not also maintained. So there would be another GP. And in that case, there will be two GPs. That means the GP to be calculated on taka 1 crore and the GP which was shown, which was earlier calculated by the SSC himself. So earlier the sale was 50 lakhs of taka, now the sale is 1 crore of taka. So if we think that 10% GP is estimated. So if GP is 10%, it means that 10 lakhs taka GP should be there by the Deputy Commissioner of Taxes. But while the SSC showed it, it was maybe at the same figure, 10% of 50 lakhs of taka, which was 5 lakhs taka. So the difference between the two GPs is taka 5 lakhs. So the difference between the two GPs is intangible addition. That means whenever your GP is 10 lakhs taka instead of 5 lakh taka, as shown by you earlier, it means that you have to pay taxes on this additional amount of GP. Of course, there will be some indirect expenses to be deducted from this GP, and you are arriving at a net profit. That is true, but you have to pay taxes. Since your GP has been enhanced by taka 5 lakhs, this is your intangible addition. The SSC has paid taxes on that. Since he paid taxes on that, this is his legal income, and this legal income has to be utilized in future. So that's why this will be treated as intangible addition, which will be shown in the balance sheet as intangible addition to the extent of taka 5 lakhs, and the assessee would be able to avail of it in future in buying some assets, buying some or doing some investments, etc., whatever it is. Okay. So next question is how decision could be made with regard to the estimation of sale, reconstruction of sale, and determining inflation in the purchase. So there would be 3 scenarios actually. One scenario would be estimation of sale. When estimation of sale is made, it is made in the circumstances when your books of accounts have been rejected by the Deputy Commissioner of Taxes. That means whatever sale has been shown by you, that is not supported by evidences, vouchers, etc., or bank statement, or cash book, sale book, etc. In that case, the DCT will not accept it, and he will just estimate the sale according to the previous record. That means on the basis of the past record. Whatever sale was estimated in the previous record, he can estimate the same figure as your sale and determine the profit. So your answer should be like this, that when sale would not be supported by evidence, vouchers, day book, daily register, cash book, bank statement, etc., or inventory book, in that case, sale could be rejected. That means the trading version could be rejected. If there is the inventory book, you don't have the basis for your purchase. That's why the whole version of the trading account has to be rejected by the Deputy Commissioner of Taxes. And now he will estimate sale, he will estimate GP, and he will estimate NP. So how to do that? It is on the basis of the previous record or past record. You will consult your file, that the file of the SSC, which has been kept with the circle. And now he can come to a decision that the sale was estimated in the previous year at taka 1 crore. So I also, Deputy Commissioner of Taxes would also say that I also accept that for this year, or I estimate the sale for this year at the same figure. And the GP, which was calculated at 10% in the previous year, is also accepted for this year. So maybe 10% on taka 1 crore, and the GP would be 10 lakhs taka. And this is how he can calculate the GP, and afterwards he can just deduct a certain amount of money, generally 1/3 of the GP as indirect expenditure. So if it is so, then the figure of net profit should be 6,66,667, something like that. So that is the net profit to be arrived at by the Deputy Commissioner of Taxes. So this is the scenario, first scenario. And with regard to the reconstruction of sale, there is a question that sometimes sale is reconstructed. And why is it reconstructed, or what is the necessity of reconstructing the sale? So first of all, you have to say why it is reconstructed, under which circumstances. Any idea from your side? So in this situation, you have to assume a trading account, and let us suppose that the trading account has got opening stock, has got purchases, has got direct expenses, and also it has got, sale figure and closing stock figure, and then GP has been arrived at. So after analysis of the books of accounts produced by the SSC and submitted to the Deputy Commissioner of Taxes, he comes to a decision that stock book has been maintained properly, or you can say inventory book that has been maintained properly. Purchase is fully vouched and verifiable. There is no problem with the purchase. Whatever purchase has been made by the SSC has been vouched and verifiable. You can verify that. That means wherever purchases have been made from, you can verify the persons from whom the purchase was made. And then direct expenses were vouched and verifiable because those are expenses, not many items. Generally might be wages or factory charges or salaries in the factories, etc., something like that, which are directly related. So those are verifiable. Since we have said that the stock book or inventory book has been maintained properly, so the closing stock or the closing inventory is also verifiable, and the figures are reflected in the inventory book as per dates, etc., and quantities are also given. So the purchases which were made from some business houses or from some business people were also mentioned. So those are also verifiable by the Deputy Commissioner of Taxes. And now the only problem is with sale. That means the sale is vouched and verifiable, but a part of the sale is not vouched and verifiable. We can say that the sale is not fully vouched and verifiable. So if situation is such that the question of reconstruction arises, in this scenario, the question of reconstruction arises. It means that you have to recalculate the gross profit. In this case, generally, gross profit, that means the percentage of gross profit which has been accepted or adopted by the SSC is not maintained by the Deputy Commissioner of Taxes, because he is going to reconstruct the sale. It means that whenever he wants to reconstruct the sale, he has to go for a reasonable GP, reasonable gross profit. Gross profit might be a little bit higher. That means if the gross profit was 10% in the previous case, it could be 12% or 13%, whatever it is, depending on the situation. That means the DCT can adopt the average gross profit in such businesses. So if the business is manufacture of shoes, the DCT can adopt the average GP of this industry, shoe manufacturing industry. So if the average GP is 12%, the DCT can adopt that. So first of all, what you have to do, you have to calculate the cost of goods sold. So how to calculate the cost of goods sold? You have got the figure of purchase, sorry, you have got the purchase of sale, figure of sale, and you have got the figure of closing inventory. So if you deduct the figure of closing inventory from the sale, in that case, you can get the cost of goods sold. Or you can do it in another way, of course. Opening stock plus purchase minus closing stock. That will give you the cost of goods sold as well, I believe. So the easiest way is to calculate it by deducting the gross profit from the sale. So if the sale is taka 100, say for example, and if GP is taka say 20, so the cost of goods sold would be taka 80. So if you think that GP is not 20, GP is 25, average GP is 25, or in the first year or in some years of this file, you will see there are different GPs. So you can calculate the average GP for this file. So let us suppose that the GP is 25%. So how to now calculate the reconstructed sale? Since we have said that sale is 100, GP is 20, cost of goods sold is 80. And we also know that the GP should be 25 in place of 20. In that case, cost of goods sold has to be divided by 100% minus 25%. That means 100 minus 25. But it should be in percentage, 75%. So we have to divide taka 80 by 0.75. So if we divide 80 by 0.75, how much would it be? So it must not be equal to taka 100. It must be more than taka 100 because the GP has been estimated at a higher figure. So cost of goods sold would be a lower figure. And that's why your reconstructed sale, that is, there would be a new sale, which is called reconstructed sale. So let us suppose that the reconstructed sale is taka 110, not 100, because it cannot be 100. It should be more than 100. So let us suppose this is 110. So if reconstructed sale is taka 110, and if your previous sale was taka 100, so the difference between the two is taka 10. So this taka 10 is to be added to profit. So that is the way how you can reconstruct the sale. In case sale is not fully housed and verifiable, but the other figures of the trading account are verifiable. So that should be your answer. And you can give an example like this. As I said to you, that sale is this taka, GP is this taka, gross profit is this taka, and GP percentage is this. Now GP percentage has been estimated at this percentage. So in that way, we calculate the reconstructed sale, and the difference between reconstructed sale and sale is taka this. So that should be added to profit. So this way you can give an example. But the third scenario here in this question is determining inflation in the purchase. So when to determine inflation in the purchase? Under which circumstances or under which scenario? Let us suppose that again we can assume a trading account, and in the trading account you see the opening stock, you see closing stock, you see sale, you see purchase. So here stock book has been maintained by the assessee. Sale is fully bounced and verifiable. There is no question with the sale. And purchase is not fully bounced and verifiable. Only thing is that purchase is not fully bounced and verifiable. In that case, what shall you do? Your sale is okay. There is no problem with your sale. Inventory is also okay. So in the purchase, it is not fully bounced and verifiable. So what you can say that purchases were made from different persons, different trading houses or different businessmen, and there might have been an inflation or inflated figure in the purchase. So the price which was actually paid for purchase of the goods was not shown in the trading account. A little bit different figures have been shown. That means some inflated figures were incorporated into the purchase figure, total purchase figure. So whenever you will assume that there was an inflation in the purchase, it means that the purchase figures shown in the trading account were not the true reflection of the transactions. Rather, some inflated figures were shown. Why inflated figures were shown? Inflated figures were shown in order to reduce the gross profit. That's why the inflated figures were shown. And if you can assume that there was an inflation or inflated figure at a percentage of 5% or 10%, you can just calculate 5% or 10% out of the total purchase figure, and you can add it to profit. It means that the objective of the associate was to reduce the gross profit. Now you have added some figure to the gross profit, that means to the profit. That means you can say, because of the possible inflation in the purchases, I would like to add 5% of the total purchase as inflationary figure, which would be added to profit. So if your purchase price is 100 taka, 5% of this would be 5 taka, and this 5 taka would be added to the profit. So this is the inflation which has been estimated, or inflationary figure that has been estimated. So these are these three scenarios, and you can cite some examples if you want to, in order to make the examiner understand that you have understood all the scenarios very well. Okay. Anything to ask from your side?
Sir, what section will be applicable for this number 2, sir. What section will be applicable?
Which number?
Sir, number 2, what you have already, sir, discussed.
We have already discussed, but
Yes, sir.
what
But
any
what the
specific?
section? Sir,
any
is there any
specific question?
section? Is there any section particularly we can see the reference for the number 2?
There is reconstruction of sale.
Yes, sir. Reconstruction of sales and determining inflation, the purchase, and including the intangible addition as well.
Okay. Reconstruction of sale, as I told you, you have to assume a trading account, and in the trading account you will find the opening stock or the opening inventory, then purchase, then some direct expense, and on the other side you will find the sale, gross profit, and of course the closing inventory. So the Deputy Commissioner of Taxes, when he examines the books of accounts of the SSC submitted by him, he finds out that inventory book or stock book has been maintained properly by the SSC. There is no problem with the stock book or inventory book. Purchases are fully boused and verifiable. Also, there is no problem with the purchase book. And direct expenses are okay because they are boused and verifiable. So the debit side of the trading account is okay. And the other side, that is the credit side, as inventory book has been maintained by the SSC, so closing stock or the closing inventory, whatever has been shown by the SSC is okay, no problem. Now the question with sale. So about the sale, the DCT sees that the sale is not fully boused and verifiable. Not fully boused, but of course partly boused. So in that circumstance, the DCT will not accept the sale. Rather, he will try to reconstruct the sale. Why reconstruction? Because the sale could not be rejected 100%. So that's why reconstruction.
So there is my question on what under what section DCT will estimate the or reconstruction of the sales under what is under what section DCT will reconstruction of the sale. That is my question. Maybe sir, I couldn't make you understand in the earlier. What is my question? My question is DCT, since DCT is not accepting the sales submitted to the submitted by the SEC, that's why he is reconstruction of the sales. But my question is here, under what section DCT will reconstruction the sales?
There is no section for reconstruction of sale.
Oh, I see. Yes. Okay, sir, I don't understand because you have already explained in the earlier. So your explanation is clear to me, but just I want to know that is there a specific section? So there is no specific section, yes, sir?
No specific section.
Oh, I see. Okay, sir, I don't understand.
Specific section cannot remain here because the way you will be calculating profit, that's the different issue. The sale has been shown by the SSC. But if you do not accept the sale, you will not accept the sale because the SSC does not have proper evidences in support of his sale. So that's why he will not accept it. So he will estimate the sale. So there is no section for estimation of the sale.
Oh,
These are traditions.
Okay, sir.
These are methods.
Okay, sir.
Yes.
Okay, sir.
There are
I'm
cases.
clear now.
Yeah.
Thank you.
So whenever you will be practicing as a chartered accountant, you have to find the interest of the assessee. But the legal points have to be known to you. You have to fight the case if you have evidences in your hand. But you cannot fight the case if you do not have evidences in your hand. So you must
Yes.
know how the DCT actually arrives at a decision. That you must know. Reconstruction, whenever is done by the Deputy Commissioner of Taxes, you will know that reconstruction is done on the basis of the GP. When the GP is not appropriate according to the Deputy Commissioner of Taxes, he will try to estimate one GP or adopt one GP from the past record or from the average of the industry, etc., etc. So he will adopt the GP at a higher figure. In that case, what happens? The sale would be a little bit higher. So difference
Yes,
between the sale shown by him and the reconstructed sale, there is a figure which is actually being added to the profit. So that is the case. You can do it in that way. And I have also explained the estimation of sale, under which circumstances you will estimate the sale. But all these are under section 28, that is calculation of business income. But how to do the business income or how to calculate the business income, that is a different thing. The income tax ordinance does not say how we will calculate it. Okay.
Okay, sir. Thank you, sir.
All right then. Question number 3. Under which circumstances wealth statement should be submitted by an individual assessee? Whether Deputy Commissioner of Taxes can ask for wealth statement or statement of expenditure from those who are not supposed to submit the same. This is a question, you cannot relate it to the appropriate section. This appropriate section is 80, section 80 of the Income Tax Ordinance 1984. But the way the question has been set here, a part of it is not related to section 80. You have to answer the question from your experience or from your, understanding from dealing with some cases while you are a student of chartered accountancy or you are dealing with a client now at the moment when you are practicing as a chartered accountant. So of course, some part of it is related to section 80. When wealth statement should be submitted by an individual assessee, if you go to section 80, there is a clear indication when you can submit your statement of assets and liabilities, or this is mandatory or not. And you will also find that this is mandatory in some cases, but this is not mandatory in other cases. If you have a certain amount of money as your income, that is total income, and if you have a certain amount of asset, gross asset, in that case, you have to submit the wealth statement. Let us see what is there. If you have the book, you can see it yourself because that will give you the proper understanding. In 80, it has been said, every individual assessee being resident Bangladeshi shall furnish in the forms and manners as prescribed a statement in respect of all assets and liabilities of the person or the spouse, minor children and dependents of the person as on the last date of the income year. If the person on the last date of the income year has a gross wealth exceeding taka 40 lakh, gross wealth, that means total wealth exceeding taka 40 lakh. not liability, rather gross wealth or gross asset and not net asset. So 40 lakh taka worth of asset, if you have, then you have to submit the wealth statement or statement of assets and liabilities. Or if he owns a motor car, if the concerned person has got a motor car, he is also supposed to submit the wealth statement. Or has made an investment in a house or an apartment in the city corporation area. So if you have bought a flat or an apartment or a house in the city corporation area, you must submit the wealth statement. So there are 3 cases under which you have to submit the wealth statement. Number 1 case is that if your gross wealth during the income year, that means on the last day of the income year, stood at 40 lakhs, stood at more than 40 lakh. That means it exceeds 40 lakh taka. So in that case, you have to submit the wealth statement. Again, another condition is there. If you have a car in your name, you have to submit a wealth statement. Or if you got an apartment or a flat or a house in the city corporation area, in that case also, you have to submit a wealth statement. And again, the statement of expenditure, that has to be submitted by the SSC. And under which circumstances, it is also said here, section 80, subsection 5. Every individual SSC whose total income does not exceed 4 lakh as on the last date, sorry, does exceed 4 lakh on the last day of the income year, shall furnish in the forms and manners as prescribed a statement of expenses relating to the lifestyle of the person. So if your income on the last date of the income year exceeds 4 lakh taka, in that case, you have to submit the statement of expenditure. So it's a IT 10BB. Sometimes you can indicate like that. So these are the mandatory cases when you have to submit the statement of assets and liabilities and the expenditure statement. But in the statement of assets and liabilities, you will find a column in which you can show the expenditure, that is the expenditure for the whole year, an expenditure of yourself and expenditure of the dependents on you, including your spouse, children, etc. So there is a figure which you should incorporate into the column or into the space. So still then, you have to submit a statement of expenses, that is a prescribed form, and which is called IT 10BB, where there will be different heads of expenditure. You have to explain how much electricity bill you have paid, how much gas bill you have paid, how much amount you have spent for the education of your children, and how much you have spent for your conveyance, etc. So there are different heads of expenditures which you have to reflect whenever your income exceeds 4 lakh taka. Okay. Another point here is that although you are not mandatorily required to submit the statement of assets and liabilities, you can submit it yourself, even you are not supposed to. So your income is very small, maybe, and your net wealth or gross wealth is also small, not a very high figure. Still then, if you want to, you can submit the statement of assets. That provision has also been given here. And when you are supposed to submit the statement of assets and liabilities and you have not submitted it, then the Deputy Commissioner of Taxes may issue a notice under this section, which is 80, subsection 7. And under this subsection of section 80, he can issue a notice asking you to submit the statement of assets and liabilities, which is said here. Where any statement as mentioned in subsection 1 or in subsection 5 is not submitted by a person, being an individual, the Deputy Commissioner of Taxes may require by notice in writing to submit the same by person within time as mentioned in the notice. So that is the notice to be given by the Deputy Commissioner of Taxes, and he has to mention a specific time by which the statement of assets and liabilities has to be submitted by the SSC. Now, you can ask me one question. And that question is, I haven't put it in the question number 3, but that could be put. And that question is, although I am not supposed to submit the return under section 80, it is also said that I can voluntarily submit it to the Deputy Commissioner of Taxes if I want to. Then what is the use of it? What is the benefit of submitting the statement of assets and liabilities voluntarily to the Deputy Commissioner of Taxes, although I am not required to submit it mandatorily? So that is the question. You can ask me that question. What is the benefit, or what is the use of it? Or is there any necessity, any benefit in future? Yes, there is a benefit. And the benefit is that we can cite an example here. Say, for example, you are a very newly recruited officer in a company and you are getting, say, 40,000 taka per month as your salary, including everything. And your salary does not attract tax because you have got the basic salary, you have got house rent allowance, you have got conveyance allowances, etc., etc. So if we calculate the total income, it does not attract the tax. But as I am saying you that you can submit the statement of assets and liabilities voluntarily, what would be the benefit? The benefit is that your total salary is 40,000 taka per month and the total income per year would be 4,80,000. And let us suppose 4,80,000, your total income actually comes less than 3 lakh taka. But including everything, you get 4,80,000. So you are not supposed to pay taxes. Or even you are supposed to pay taxes at a minimum amount. Say, for example, you are just paying the minimum amount of tax. Say 5,000 taka, whatever it is. So if 5,000 taka is deducted from your salary every month, you are paying taxes at the end of the year 60,000 taka. So from 4,80,000, 60,000 taka has been deducted as tax. So the remaining amount in your hand is 4,20,000 taka. So this 4,20,000 taka is the disposable income in your hand, and you can spend this amount in any way, whatever you want to. So this 4,20,000 taka, and let us suppose that you are living in a shared accommodation. Shared accommodation means in a flat you are living with some other friends or other persons known to you, and you are sharing food, etc. So in that case, you are spending an economical amount of money for your livelihood. So let us suppose that you are spending 10,000 per month as your expenditure. So taka 10,000 per month as your expenditure, it means 1,20,000 you are spending every year. So as we calculated that your disposable income is 4,20,000 and you are spending for your livelihood taka 1,20,000 per year. So what is the rest of the money? 3 lakh taka is your rest of the disposable income. So what you can do? You can show that this taka 3 lakh has been saved by me during the year. And if you just show this amount of money every year for 5 years, taka 15 lakh you can show as your saving, which is a legal money, of course. And you can spend this money in any asset purchase or any other investment or in buying instruments, government instruments, etc., etc. Or when you are booking a flat with that money, that is also possible. So this 15 lakh taka is definitely your legal income, which you can utilize anytime. And since you have shown it in your wealth statement every year, it means that whenever you are going to invest that amount of money, the Deputy Commissioner of Taxes would not be able to ask you a question. Because if he asks you a question, you can say that I have shown the saving every year and it was accepted in my assessment. So that's why I should be allowed to spend that money anywhere I like. This is my legal money. So this is the reason why you can submit the statement of assets and liabilities voluntarily in order to have a benefit in future. So that should be the way how we have to proceed. Okay.
Sir, I have a question, sir.
Yes.
Sir, I'm not supposed to submit my liability and asset statement because I have a poor amount of income. But can SSC ask for me for the statement?
Yes. Yes, you can be asked by the Deputy Commissioner of Taxes to submit it. And the later part of the question is related to that. Whether Deputy Commissioner of Taxes can ask for wealth statement or statement of expenditure from those who are not supposed to submit the same. He can ask, although Section 80 does not say about that. So that's why I said to you at the beginning of discussion of this question that this is not fully related to Section 80, but you have to answer the question from other experiences or other understandings. So what the answer is, although Section 80 does not require you to submit the wealth statement, the Deputy Commissioner of Taxes can ask for that. Okay, so you know that Deputy Commissioner of Taxes is in charge of a circle. So he has got some jurisdiction under which you are paying taxes. That means he has got some jurisdiction over you. And there are other circles. In each circle, there is an assessing officer, whether he is a Deputy Commissioner of Taxes or Assistant Commissioner of Taxes or Extra Assistant Commissioner of Taxes, whoever he is, but there is an assessing officer. So let us suppose that another Deputy Commissioner of Taxes who is in charge of another circle, he comes to know from a source that you have got an apartment in other areas, not in the area where you are living, but in other areas. And this has come to his knowledge through his inspector of taxes. And you haven't shown it. You haven't shown it because you thought that my income is not taxable. So that's why I should not show it. And that Deputy Commissioner of Taxes, he will issue an information slip, which is called information slip. Information slips are sent from one circle to another circle. Whenever an information is received by a Deputy Commissioner of Taxes of a concerned circle, he will see whether this is related to his circle or not. So if it is not related to his circle, or if it is not under his jurisdiction, then he will send the information slip to the concerned circle. That means you are an associate of a certain circle. So information slip should come to the Deputy Commissioner of Taxes under which you are being assessed. And that information slip says that you have got an apartment in another area of Dhaka city, which you have not shown here. That means you are not submitting the return, so that's why there is no question of showing it. So when your Deputy Commissioner of Taxes comes to know this, he will definitely issue a notice asking you to submit the return as well as the wealth statement, because you have got an apartment. So he will ask you how you bought that property. What was your source of income? So you are supposed to submit the return now, although you do not have taxable income, but you have to prove it. And then you have to show the source of your fund with which you bought that property, that is the flat or apartment. So if you can explain it properly to the Deputy Commissioner of Taxes that you bought the property with a valid fund, or it was gifted to you by somebody, some of your close relatives, that means your father, mother, or your spouse, or your father-in-law, whatever it is, or it was bought with the money or with the gift sent to you from your brother who is residing in the USA. He sent some money to you in order to buy an apartment for yourself. That could also be done. And in that circumstances, your explanation will depend whether you have to submit the return, you have to pay taxes, or you have to explain the funds in an elaborate manner or not, whatever it is. So everything will be decided by the Deputy Commissioner of Taxes on the basis of the information you will be providing. So in this circumstance, the Deputy Commissioner of Taxes would be able to ask for your statement of assets and liabilities, because he needs to know whether you bought this property or not. So if you have bought this property, definitely you will show it in the statement of assets and liabilities. So in that case, it will be properly reflected and that will be recorded in the DCT's circle. Is it okay for you?
Yes, sir. It's okay. Thank you, sir.
So this is from practical experience, and you will not get it in your income tax ordinance. So you have to answer such questions from your practical knowledge, from understanding, from experience, etc., etc. Okay. Do you need any break for your prayer or for anything? If you need, tell me, or if not, it's okay. Okay, then come to question number 4.
Sir, sir, please give us 10 minutes break for prayer.
10 minutes?
Break, sir.
Okay, 10 minutes or 15 minutes?
Yes, sir.
Okay.
15
Okay,
minutes.
then take a break for 15 minutes and then come back. Okay, everybody come back. Let us now discuss the question number 4. A trader entered into a contract with a farmer of Uzbekistan to supply cotton. The trader entered into this contract in order to guard against loss through future price fluctuations for the purpose of fulfilling his contract to supply RMG to the EU. Is it a speculation business? So a scenario has been given. That means a trader of Bangladesh, he has entered into a contract with a farmer of Uzbekistan who would like to supply cotton to him in order to avoid future price fluctuations or to guard against loss through future price fluctuations. So there is the likelihood that prices will vary sometimes. So this is an international business. And RMG, that means ready-made garments. It's being prepared in Bangladesh and supplied to the rest of the world, especially to the European Union. So how the ready-made garment is made? It is made out of cotton, that means yarn. So in order to convert cotton into yarn, it needs some processing plant. And first of all, the raw materials has to be procured. That means there is no raw material in Bangladesh. Generally, 2% of the total cotton requirement is met from Bangladesh itself, and rest of it, there is 98% comes from other countries of the world, like India, like China, like Uzbekistan, like US, etc. So cotton has to be procured by Bangladeshi traders in order to manufacture ready-made garments for onward sale to the European Union or other countries. So here also, a trader, he entered into a contract with a farmer in Uzbekistan. He predicts that there could be price fluctuations in future. So because of the price fluctuation, he will incur a loss, because whenever he reaches a contract with a trader in European Union, that means the importer of his goods from European Union, he has to fix a price. That means I will be supplying the ready-made garments at this price for the next 1 year. So if contract is such that the price should remain the same for the next 1 year, then the raw material which the manufacturer would require to make the product, he has to make sure, or he has to be assured of the supply of cotton during that period at a fixed price. And he has to make the calculation of the profit, that is the margin. So if the price increases, that means the price of raw materials increases, then the cost of production will also rise, and in that case he has to suffer a loss. In order to guard against that loss, the gentleman has agreed with a farmer in Afghanistan for the supply of the cotton. Now the question is it a speculation business or not? Your answer would be whether this is a speculation business or not. You can state the reason why it is not speculation business or why it is speculation business. Which section you have to consult for this? No idea about it? If you go to section 2, subsection 61, you will find the answer to this question. So the definition of speculation business is given there. Section 2, subsection 61, speculation business means a business in which a contract for the purchase or sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by transfer of the actual delivery or transfer of the commodity or scripts, but does not include business in which a contract in respect of raw materials or merchandise is entered into by a person in the course of his manufacturing or mercantile business to guard against loss through future price fluctuations for the purpose of fulfilling his other contracts for the actual delivery of the goods to be manufactured or the merchandise to be sold by him. So speculation business means a business when the actual delivery of goods, including stocks and shares or scripts, does not take place, but it is ultimately settled or periodically settled without the actual transfer of the good or service or script. So here, it is not like that. It is quite different because actual delivery of goods should take place. The cotton will be needed by the trader in Bangladesh, and he has to use the cotton for manufacture of the ready-made garment. So that's why actual delivery takes place. And speculation business is also related to the fact that a person would like to make a profit within a short span of time, meaning that he will be observing the prices of a particular product or particular script, that is share, which he holds for a period of time and then sells it out. Or he just buys the shares through his broker. The share remains with him. That means the right in the share remains with the broker. And after 15 days or 1 month or 2 months, the share is again sold out. So the share does not come into the hands of the SSC, rather it is lying with the concerned person of the stock exchange or the brokerage house, etc., or with the original seller. And that's why it does not actually take place physically. So that business and guarding against loss for future price fluctuation, that is another business. So this is quite different. And because of the difference, this type of business, that is guarding against loss through price fluctuations, would be treated as not a speculation business, rather a normal business. So this is a normal business, not a speculation business. So you can refer it to section 2, subsection 61. And in that way, you can answer your question. Okay. Then you can come to question number 5. What is the legal point in exercise of power or jurisdiction by a successor officer while he takes over from another assessing officer? That means when the Deputy Commissioner of Taxes is in charge of a circle and proceeds with the assessment, that means issues different notices for the purpose of assessment or as a matter of proceeding for the assessment. But all of a sudden is transferred to another circle. So he makes over to another officer, and the officer who is coming to this circle, he takes over. So question here is with regard to that, what is the legal point in exercise of power or jurisdiction by a successor officer, that is Deputy Commissioner of Taxes, while he takes over for another assessing officer? Now Mr. A is the departing officer and Mr. B is the incoming officer. So Mr. A has just relinquished or he has just made over. And the incoming officer, he just assumed office or he took over. So that's the fact. Now, the Deputy Commissioner of Taxes who is departing, he actually issues notices, maybe under section 79, under section 83(1), etc., in order to proceed with the assessment. And the Deputy Commissioner of Taxes, the new one, that is the incoming one, when he sees that notices were issued by his predecessor, whether he will again issue the same notice or not, or he will start with the next proceeding, the next stage of proceeding, where the predecessor has finished. That is the question, and you should answer it, referring to the appropriate section. So any idea about it? You should actually read section 7. In section 7, it is said that where in respect of any proceeding under this ordinance, an income tax authority is succeeded by another. The income tax authority is so succeeding may continue the proceeding from the stage at which it was left by his predecessor. So an income tax authority, when succeeded by another, the income tax authority is so succeeding may continue the proceeding. That means the incoming authority or incoming officer may continue the proceeding from the stage at which it was left by his predecessor. So predecessor, he completed some stages of the proceeding, and whatever he has completed should not be completed by the succeeding officer anymore. Rather, he will start from the stage left by his predecessor. Meaning that the stage at which the predecessor left, the succeeding officer will start from the next one. So that should be the answer, and you have to refer to section 7 of the IT Ordinance 1984. So example could be cited. That means when a departing officer has issued notice under section 79 of IT Ordinance 1984, the incoming officer may issue the notice under section 83(1), not under section 79, because it has already been issued. Then come to question number 6. Why delay interest is charged on an individual? Delay interest is charged. When delay interest is charged and why it is charged? It's not simple interest, rather this is delay interest.
After tax holiday, sir, after tax day.
Yes, tell me.
After tax day, delay interest will be charged on individual when tax day is finished.
But you have to tell the background about it, because an SSC is supposed to pay delay interest under some circumstances, because he is supposed to, that means the individual SSC is supposed to submit the return under section 75. And the date of submission of the return is within the 30th day of November, that is the tax day. By the tax day, he has to submit the return. But if he cannot submit the return by the tax day, then delay interest could be charged. Again, you have to know that you are supposed to pay the amount of taxes for which you are liable. So if there is a gap between the tax you have paid and the tax you are supposed to pay, so there might be a gap, or there might be a difference. So if you find that there is a gap between the tax you have paid and the tax you are supposed to pay, then you should pay delay interest at the rate of 2% on the difference amount per month. So there could be two situations. One situation is that you are submitting the return after 30th day of November, which is the tax day, and you have found out that the advance tax you have already paid and the tax deducted at source, and the amount of tax you are supposed to pay for the income year, there is a cap. You can calculate yourself. Or the DCT makes an assessment. That means you have submitted a return under the normal scheme. That means it is a normal return, not a self-assessment scheme. And in that circumstances, the Deputy Commissioner of Taxes would make the assessment, and he will determine the tax. And he will also take into account the advance tax you have paid and the tax you have paid under Section 74. That means you have paid the tax along with the return. And he can also still find a difference between the tax paid by you in any form and the tax to be payable by you. So that is a question when the city would like to impose delay interest, and it is under Section 73A. If you go through that, you will be able to understand everything what is said about the imposition of delay interest. So Section 73A, as I have said to you, this is the delay interest for not filing return on or before the tax day. So tax day is the 30th November, you know it very well. The tax day was earlier 30th September, and sometime it was 15th September. So now presently this is 30th November. So it is said here that where an assessee is required to file a return of income for an assessment year under Section 75 and fails to file the same before the expiry of the tax day, the assessee shall, without prejudice to any other consequences to which he may be liable to pay, delay interest at the rate of 2% per month on the difference between the tax assessed on total income for the assessment year and the tax paid in advance for the assessment year, including the tax deducted or collected at source. So it has been said here very clearly that you have failed to pay, submit the return on the tax day or before the tax day. And now you have seen that there is a difference between the tax to be payable by you and the tax you have paid through advance tax or through tax deduction at source, whatever it is. And now the subsection 2 of this section says the delay interest under subsection 1 shall be calculated for a period from the first day immediately following the tax day to which the return is filed, to where the return is filed, the date of filing the return, where the return is not filed, the date of regular assessment. So when to impose the delay interest? It is imposed from the first day following the tax day. That is the start. of imposition of delay interest. And how long it will be imposed? When the return is filed, the date of filing the return. So delay interest will be charged for the period from the first day following the tax day to the date of filing the return. That means when the file is submitted by the SSC up to that date. And when the when the return is not filed by the SSC, in that case, when the assessment is made by the Deputy Commissioner of Taxes, provided that the period for calculating delay interest under this section shall not exceed 1 year. So here there is a bar or there is a limitation that the delay interest could not be charged for more than a year. Provided further that the delay interest under this section shall not be payable by an SSC for whom the provision of subsection 5 of section 75 applies. So here another important point you have to remember that all the individual SSCs will be subject to delay interest if he or she fails to submit the return on the tax day or before the tax day, and there is a gap between the payment of taxes and the tax to be paid. But there is an exception, and the exception is section 75 subsection 5. So here a restriction has been imposed. So what is said in section 75 subsection 5? Those SSCs who fall under this subsection shall not be liable to pay delay interest. Who are those SSCs? When an SSC is a government servant, or an officer of a corporation owned by the government, and if he goes abroad for training or for higher studies on deputation or on leave, whatever it is. So when he goes abroad and stays there for a certain period, that means if he goes there for doing a PhD program in the UK or in the USA, whatever it is, during that period, he is not supposed to submit the return to the Deputy Commissioner of Taxes. What he will do, after completion of his degree or whatever it is, the master's or PhD program, whatever it is, he will come back to Bangladesh, and when he arrives at Bangladesh, on the day of his arrival in Bangladesh, he has to submit his return for the whole period of his stay outside at a time. That means his returns will be submitted at a time for the whole period in which he could not come to Bangladesh, or in which period he could not submit his return. So the provision says that whenever he comes to Bangladesh, he will submit his return at a time for the whole period he was away from Bangladesh. So that is said under section 75.5. That means subsection 75 of subsection 5 of section 75. So the restriction as to the imposition of delay interest, it was said like that. Those people would be excluded from this, delay interest calculation. They are not supposed to pay the delay interest because they have been exempted from that. And the answer should be like this. Why delay interest is charged? It is because of the reason that there is a gap, that the tax to be paid by the assessee falls short of the tax already paid by him. So that is the reason why the interest should be charged. And this is just to discourage the assessees submitting the return after the tax day. So it should be encouraging for the assessees to submit the returns before the tax day or on the tax day, so that delay interest is not paid by him or her. Then question number 7. When an individual assessee is supposed to pay simple interest, and under which section of the IT Ordinance 1984? When the assessee is supposed to pay simple interest, under which section? How he should pay simple interest? This is also related to section 73, that is imposition of simple interest. Generally, there is a condition that everybody has to pay taxes in 4 installments in the income year. And there are 4 dates actually. What are the dates? The dates are 15th September, 15th December, 15th March, and 15th June. So these are the 4 dates on which or by which the SSC has to submit, has to pay the advance tax. There are 4 installments, as I said to you. You pay your taxes on the basis of the last assessed tax. And you can increase or decrease the installment. Sometimes you can pay more, sometimes you can pay less, whatever it is. But the tax paid by you should not be less than 75% of the assessed tax. When the district makes the assessment, it actually determines an amount of tax which you have to pay. And the advance tax has to be at least 75% of this calculated tax. And if your payment of tax falls short of the 75% of the assessed tax, then you are supposed to pay simple interest. And this is said in section 73. Let us see what is said in section 73. So where in any financial year, advance tax paid by an SSC, together with the tax deducted or collected at source, if any, under this chapter, is less than 75% of the amount of tax payable by him as determined on regular assessment, the SSC shall pay, in addition to the balance of the tax payable by him, simple interest at the rate of 10% per annum on the amount by which the tax so paid, deducted, and collected falls short of the 75% of the assessed tax. provided that the rate of interest shall be 50% higher if the return is not filed on or before the tax date. So another condition is that if you do not submit the return on the tax day or before the tax date, but you submit the return after the tax date, then your rate of interest shall be 50% higher. That means it should be 15% if the return is not filed on or before the tax date. So if your determined tax is taka 100, for example, and if your paid tax is less than 75 taka, that means 74 taka maybe, in that case, on the difference amount or deficiency amount, you have to pay taxes at the rate of 10% per annum. That is deficiency amount is 26 taka. If you have already paid 74 taka, on this 24 taka, you have to pay 10% per annum. That means 2.4 taka per annum. But if you have not submitted the return on the tax day or before the tax day, in that case, your rate of simple interest would be 15%. That means you should pay not 2.40, rather you should pay 3.60. Now it is said in subsection 2, the period for which the interest under subsection 1 is payable shall be the period from the first day of July next following the financial year in which the advance tax was applicable to the date of regular assessment in respect of the income of that year, or a period of 2 years from the said first day of July, whichever is shorter. So you have to pay the interest, that is simple interest, from the first day of July next following the financial year in which the advance tax was applicable. So from this 1st July, you should pay the simple interest to the date of the regular assessment in respect of the income of that year, or a period of 2 years from the said 1st day of July, whichever is shorter. So the maximum period of payment of simple interest is 2 years, but you have to compare between the two. That is calculation to be made from the 1st day of July up to the date of regular assessment. And whenever the period is more than 2 years, it should be limited to 2 years, not more than 2 years. And if the date of regular assessment is less than that, maybe 1 year, so you have to pay the simple interest for 1 year, not for 2 years. So that depends. Maximum period of payment of simple interest is 2 years, but first you have to calculate the period from the 1st day of July to the day of assessment, regular assessment. So if that period is shorter, you have to pay simple interest for the shorter period. And as we have said that when the assessee has not submitted the return, the simple interest would be charged at the rate of 15% rather than on 10%. So that is also a provision that has been said here. But if you see that sometimes assessment made by the Deputy Commissioner of Taxes is not maintained. Maintained means it is not maintained by the appellate authority if you prefer an appeal against the order. So whenever an assessment is not maintained by the appellate authority, in that circumstances, the Deputy Commissioner of Taxes will revise the assessment. And on the revised assessment, he will again calculate the simple interest on the determined income. So new fresh assessment has to be made, and new calculation of simple interest is done because of the changed circumstances or because of the instructions given by the appellate authority. And sometimes when simple interest has been charged by the Deputy Commissioner of Taxes, has to be refunded to the SSC because it does not attract, because the determined tax which was calculated by the DCT has now been reduced, and the determined tax is now a lower figure. So under that circumstances, maybe 75% of the advanced tax, it has come down to some of the figures, because whenever the figure is 100 and 75% means 75 taka you have to pay as advanced tax. But if your advanced tax is already given at taka 70 and your total income that has come down to 80, and in that case the percentage of the advanced tax on the figure of taka 80 will not attract simple interest. So this has been done, or this has been happened on the basis of the appellate order given by the appellate authority. Otherwise, it would have been a little bit different. So revision of assessment orders is possible, and since revision is possible, the calculation would also be different under the changed circumstances or changed scenario. So I think this is also clear to you.
Yes, sir.
And then come to question number 8. How can a Deputy Commissioner of Taxes take steps to realize revenue very quickly?
Bank attachment.
How to do it?
Through bank attachment.
Through bank attachment, okay. That is a measure. That is a measure. But in order to realize the revenue quickly, you have to make the assessment. Otherwise, you cannot realize the taxes. If you want to say that, okay, I will attach the bank account, yes, you can do that. But for what you are doing that? What is the purpose of attaching the bank account? Because you need to have some special purposes. Special purposes means you have to realize the revenue from the SSC. That means realize the tax from the SSC. There might be some outstanding taxes from the side of the SSC, which you have to realize. That is one of the purposes. Or another purpose could be that you have given the SSC some chances of payment of taxes. Maybe you have given him some installments that you make your payment through 5 installments or 6 installments, etc. But he failed to pay the installments as per arrangement between yourself and the SSC himself. In that circumstance, you can search for his bank account and you can attach the bank account so that he pays your demanded tax accordingly. So that is a threat, or that is a pressure that is actually put on the SSC. So in fact, what we would like to say here how to realize taxes very quickly. It is through assessment, because if you do not make the assessment, you cannot claim the money from the SSC. In order to claim money from the SSC, you have to issue an assessment order, a demand notice, and a challan. So those are actually needed for realization of taxes. So wherever you want to realize taxes very quickly, it means that the assessment has to be made. But under which section? Because if you make the assessment under section 83(2), there is a likelihood that the SSC may not be satisfied with your assessment order, and he can prefer an appeal against your order. So if he prefers an appeal against your order, the appellate authority will take time to give a verdict. So after the appellate authority gives a verdict, in that case, the SSC the Deputy Commissioner of Taxes has to revise the assessment order accordingly, and then again issue a demand notice. So this is a fresh demand notice to be issued by the DCT. And again, there is another problem. That means if the DCT is not satisfied with that order, that is the order made by the appellate authority, then he can prefer a second appeal. And the second appeal is before the tribunal. So if he goes to the tribunal again, and then they will also take some time in order to dispose of the case. So it's a time-consuming step that will be taken by the DCT. And even if the DCT makes the assessment under section 84, the same case, because the SSC will definitely prefer an appeal against the order of the Deputy Commissioner of Taxes, because he was not assessed after hearing. So that's why he could not explain the situation properly to the Deputy Commissioner of Taxes. So he did not get a judicious assessment order. So that's why he will definitely prefer an appeal. And in that case also, you have to wait for long in order to see the appellate order and to revise the assessment accordingly. That's why these are all little bit cumbersome and time-consuming cases. So what you have to do, you have to make the assessment under section 81 first. As soon as you get the return from the SSC, apart from the returns which are submitted under self-assessment scheme, the returns which are submitted under the normal scheme, those are to be assessed under section 81. If you make the assessment under section 81, it means that whatever income has been shown by the SSC in the return, you are accepting that for the time being, because this is not a regular assessment or final assessment. Rather, this is a provisional assessment. So on the basis of the provisional assessment, we will demand money from the SSC, because the SSC does not have to dispute with that demand, because his shown income has been accepted by you. So that's why he will definitely make the payment within the specified date given in the demand notice. That's why that is the quickest way to recover taxes from the SSCs, by making assessments under section 81, which is called provisional assessment. If you go through the income tax ordinance, you will see section 81, which actually gives you how to proceed with the making of assessment under section 81. So that's the way how you have to make the assessment quickly. And this is not appealable. The SSC cannot prefer an appeal against your order. But it is not the final assessment. Rather, you have to make a final assessment afterwards. Whenever time permits you, you will make the assessment. So you can make the assessment even after 1 month, whenever you think fit. So when final assessment is to be made, in that case, the final determination of tax would be there, which the SSC has to pay. And whatever tax has been paid by him already, and that amount will be given credit. In that way, the assessment will be completed. Fine. You, as a Deputy Commissioner of Taxes, find that in a shopping mall in Dhaka City, a lot of shops and small enterprises are not under the tax net and they were never assessed. What would be your action? Here you are playing the role of a Deputy Commissioner of Taxes. You see in a shopping mall that there are so many small shops and enterprises which were not under the tax net and they were never assessed by the concerned Deputy Commissioners of Taxes. So what would be your action?
Spot assessment, sir.
Hmm?
Spot assessment.
Yes, spot assessment. You have to make this spot assessment. If you make this spot assessment, there will be two things. Number one, they will come under the tax net. And number two is that they will just pay taxes as per your demand. That means you will make instant assessment there. So instant assessment will be on the basis of the stock, stock of the shop. So you will try to determine the value of the stock and the inventory turnover. That means if you think that the turnover of the inventory is 6 times a year or 8 times a year, in that case you can calculate the sale. And if you can calculate the sale, then you determine the GP and the net profit. So GP almost is determined on the basis of the industry average. Industry average means on the average gross profit percentage, which is applied to small shops, that is stationery shops, cosmetic shops, etc. So it's normally 15%. And in that way, you can make the assessments. So instantly, the receipt you will be giving to the shop owners will be treated as assessment orders, and they will pay the taxes. And instantly, they will have the TIN number. So that's why you will have a good number of taxpayers, which will be under your net, and the realization of revenue could also be possible by you, and the assessment will be completed under Section 82D. So whenever you go to the shopping mall, it means that you have to go there yourself with your inspector of taxes and your supervising authority. Supervising authority means Joint Commissioner of Taxes, inspecting Joint Commissioner of Taxes, or inspecting Additional Commissioner of Taxes. So it's a group that you will be part of it, and you can complete assessments within a day, having a good number of assesses in your net, under your net. So that could be the way of trying to use the number of assesses. Number 10, under which circumstances notice under section 1 of 93 could be used? So for this, you have to go through section 93. Section 93, when it is issued when income is escaped, or you have not submitted the return under section 75 or 77. You are supposed to submit the return under section 75. If you do not submit the return under section 75, then the DCT has the obligation to issue a notice under section 77. And the notice under section 77 could be issued up to the last day of the assessment year. So still then, if you do not submit the return, then the DCT will have no other option but to issue a notice under section 93 asking you to submit the return. And again, when the assessee escaped assessment for any reason, that means he never submitted a return, etc. In that case, issue of notice is also possible under section 93. So you go through section 93, there are subsections, different subsections, and you can relate to them, whatever is necessary. And also number 11. This is with regard to obtaining a clearance certificate from the Deputy Commissioner of Taxes. A person when leaving Bangladesh for certain reasons, sometimes he has to seek a clearance certificate from the Deputy Commissioner of Taxes, and he has to pay taxes accordingly, or his assessment is made by the Deputy Commissioner of Taxes. Whenever it is apprehended that the person concerned will not be coming back to Bangladesh, then his assessment is completed. Otherwise, a tax clearance certificate is given by the DCT stating that this person is a regular taxpayer here, and I understand that he is going abroad in order to do something as a part of his business activity, and he is very likely to come back to Bangladesh soon or after a certain period of time. In that case, he gives the clearance without making the assessment. Section 12, 13, and 14, all these are related to penalties. So penalties for different actions. That means for not submitting the return, or failing to pay advance tax, or failing to comply with notices, etc. So these are the questions which are related to penalty. If you go through the penalty section, there are specific penalties to be imposed on the assessees for violation of the compliance. That's why these are not very difficult to understand, but still then if you do not understand, then we can just discuss in the next class, at the beginning of the next class. Or if you understand well, then there is no need to discuss all these questions in the next class. I hope that you not have any problem, whatever we have discussed today. If you have any problem, you are very much welcome to ask me anything, whatever you want. Okay. With no question, then we call it a day. And then thank you very much for your attending this session.
Thank you, sir.
Thank you, sir.
So thank you so much.